Hi traders, this is Elite Currency with a video of the Forex market focusing on the long term. Before we dive into today's topic though, be aware that trading for exchange is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. If you're continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. Alright, let's kick off this video with euro dollar. Taking a look now at the monthly chart, you can see the price is moving lower obviously, but is getting some kind of consolidation here right in this part. We've had about 7 months, I think, not breaking the low of last year. So that's looking like a bigger consolidation. That downside could have been part of the downtrend, but it actually bounced off this green line. We're getting kind of a double bottom because last month's candle was bullish. So with that last month's candle being bullish, a double bottom scenario seems more likely. And if there is a double bottom, then probably a wave 4 kind of expansion seems more likely. A bigger correction where we see price just going sideways, maybe for the next 3 to 6 months before we get the downtrend continuation. Now, why do I expect the downtrend to continue in the first place? Because if we look at this structure, we see a wave 3 and 4. Wave 4 basically just going flat and sideways as it should, and not correcting that deeply. Price bounced off a 38.2 fib here at 117. So that's typical for wave 4, which means that the next wave could be a bearish wave 5. All right. So if you look at that, 1, 2, 3, 4, 5 would be the next step of the blues that you're looking at. So at the moment we're in blue 4. And then within blue 4, we're looking at a green WXY, an expanded correction in a way of this particular price action. That all, this particular pattern, the 1, 2, 3, 4, 5 pattern, is within purple C. That's a ABC correction. Started off here in 2009 with the financial crisis, then a long triangle for wave B, and then again a bearish wave C. So it's finishing an ABC to the downside with targets way down here at potentially below parity, maybe even down to below 09. All right, let me use a drawing tool here to explain a bit better here. I'm talking about this ABC, as you can see right here, and that is basically the correction that we're looking at now. The B was long lasted in a triangle, and we're talking about the break of that triangle already, actually, at Admiral Markets. Nenad and I were looking at this break very, very long ago. And the break did happen, and it was very impulsive as expected, and we got that move down. Very nice trend, of course, at the beginning of 2015 and 2014. Now we're getting this consolidation. So we have to know more about this consolidation. So let's zoom in and take a look at the weekly chart. All right, looking at the weekly chart, you can see the triangle here of the wave B a bit up close, of course, and you see also the wave C and the 1, 2, 3, 4, 5. Now, within wave 3, obviously, you have 5 waves going to the downside very fast. And you can see the speed of price action. Look at that fall. A lot of candles pushing down, keeping the lows, making lower lows, making lower highs. And it's a continuous kind of movement to the downside. Obviously, what we see now is a bigger consolidation and price making kind of a correction type because price is just oscillating to the downside. We can see, oscillating to the sideways movement, right? We see WXY finishing green W. And we recently had an ABC, probably an ABC, right? Because at that moment, we were not sure if the ABC was going to be a 1, 2, 3 or an ABC. And price bounced off the support, bounced off that previous bottom. So very strongly, which makes me believe that it's an ABC. Obviously, if price does break below the 105 bottom here, the green circle, well, then there still could be a wave 5, and the wave 4 could have ended up here. For the moment, as long as price stays above this 105 bottom, I'm expecting this to be a bigger correction and actually expecting the wave Y now to be in place of wave 4. So once that finishes, I'm expecting the downtrend to continue. All right, so that's either, once again, if price breaks below 105, all right, or if price oscillates here sideways for the next 3 to 6 months, then I would expect wave 4 also to finish, and we can see then a bigger fall occur as part of the wave 5 blue. So for the next 3 to 6 months, unless price breaks below 105, I'm expecting a sideways movement as part of wave Y of green wave Y, and blue wave 4. all right, next 3 to 6 months, which means that price can go sideways, rally up and down, or maybe even have a slight angle to the upside as it corrects kind of like this in a way and then falls. So you can see there's a bit of an upside angle perhaps visible. So this is how the Euro-Dollar weekly chart looks like on the Admiral Markets MT4 Supreme Edition platform, and you can see the impulsiveness here on the downside. The 8 EMA basically, or price staying actually below the 8 EMA, very impulsive, of course, if price stays below that impulse. In fact, when that many candles are not touching the 21 EMA band, that's a significant number, really very high. So from that point of view, obviously very bearish, and price should be expected to continue downwards. The only question is when and where. The green line here, as I indicated already, very important for support. The other option would be if price maybe rallies back to the resistance and then after 3 to 6 months starts to fall again. So from that point of view, let's dive into the daily chart here, and we can see that price made a strong upside, but now slowly moving down. I think that this still remains a correction. If I put a fib like this, we hit the -272 target, bounce off that. Price could still go down to these targets, but I'm not expecting, as I said, this green and the bottom to break. If it does, certainly changes my outlook to bearish. As long as price stays above this green and hits these targets and bounces, I think that there's still more potential for a rally here to the upside than downside, because the space to the downside is just not that big. When a big support level is down here, a big trend line is down here, and price is pretty close to it, it could still fall a bit, right? But otherwise, there's a bigger chance that eventually we'll get a bigger bounce up to perhaps this resistance, or even higher up to here, right? So when I put a fib from this bottom to this top, I also see the Fibonacci retracement levels, not only the targets. This was a -272 target. It's equal to the 61.8 fib. The -61.8 target is probably equal to the 78.6 fib. So those are likely bouncing spots as well. I'm expecting price to bounce off one of these two levels and go up to the -272 target. All right. So from a 4-hour point of view, we had a double bottom here at the 61.8 target. Got a bit of a rally here already, but it's facing some rejection. Obviously, on the 4-hour chart, there is a downtrend, so that's not strange. There could be a bigger hook back. And then, well, what I'm looking for basically is some clues whether price can break down to the 78.6 fib or whether we get a bounce. Both are possible, right? The question is, how will price respond when it gets down to the support levels down in here? So a break, from my point of view, a break below this bottom on the 4-hour chart means a continuation to the downside here to the 78.6 fib on an hourly chart, and then a potential bounce off the 78.6 fib, and potential swing trade, I would say, to the upside, as already indicated. If price shows any potential support above this green line, that could be anywhere from the green line up to even now, there could be a continuation as well, up to the resistance line, first of all, right in here. All right, let me make that orange so that seems a bit more natural in its resistance there. All right, so very curious how price will respond in this area and whether we get a continuation to the downside or a bigger correction to the upside here up to that orange trend line. So we're going to keep an eye on hourly candles basically to see price action and how it responds to the support level and whether it bounces or breaks. All right, I'm going to continue with the pound USD and the dollar yen in just a second. But before I continue, just a quick word about which broker we trade with, which is Admiral Markets. We highly recommend Admiral Markets. And perhaps you can check out our webinars and analysis at Admiral Markets as well. And we find it a very great broker. I mean, we got good platform. Supreme Edition has 60 extra features besides the normal MT4 things. So Admiral Markets has created extra material for the MT4. A lot of extra features that are very useful. And part of the reason also that Admiral Markets has won the UK Forex Awards in 2015 as the best MT4 broker. All right. Now, if you join Admiral Markets through our link, which you can see in blue here, tr.admiralmarkets.co.uk, etc., you not only get actually credit for your volume that you can use for our website, Elite Currency, but we're going to give you a moving average course as well, which is valued at €890. So we want to help you out with trading, and we can do so by giving you education, and we give you our course, but we also give you actually, as you trade, credit per month that you can use for other things as well. So you can basically use that credit to do anything on our website. You can buy any indicator or system or strategy that you like. So that's interesting, I think. Or if you are interested in a strategy, we're offering a ACU pivot point strategy with a discount until January 31st. 500 euro discount, normally about 1100, now just below 600 at 595. So take a look at this link, elitecurrency.com/accurate pivot points, to find out more about that strategy. It's very simple. It's based on candlesticks. It's based on the accurate pivot point, moving averages, and multiple time frame indicator. So it's a straightforward one, but I think you'll very much value it. So take a look at that link to find out more information about it. I really enjoy trading it, and there's actually another video on our YouTube channel that shows some trades of this week. All right, moving on to the Pound USD monthly chart here. You can see that basically price is at an important support trend line here, and it could be a bounce or break spot. If it bounces, wave B brown here could still be intact, and price could still be correcting within wave B. If price breaks below that support trend line, I'm expecting a continuation of the bearish wave C. So it is an important point here actually on the Pound USD. If wave B is still intact, price should bounce, break this orange trend line, and probably expand a bit higher like that before potentially turning around there. This is the 50 fib, then probably at the 61.8 fib for downside yet again. So that's what we are expecting to complete wave B and then go down for wave C a bit later. If price breaks, then wave B is indeed finished, and we're in a wave C. Price could fall towards these Fibonacci targets. All right. So that wave C is part of a bigger correction, as you can see here. I think that wave count is a bit less relevant. Wave C is the primary driver here, and price could fall towards these targets, and eventually, of course, bounce at those targets as well. All right, looking at the weekly chart here, you can see price basically approaching this trend line, and it was in a kind of slower downtrend channel here, but quite choppy actually, but recently broke below the bottom. Could be getting a bit of an acceleration here, or not. Let's see. It is pushing through that support, but it still has one major support line left, of course. But the break of the downtrend channel here to the downside could be a first signal, though, of more weakness to come. So let's see how price responds here. It could still bounce, of course, because of the trend line and the bottom, obviously. Big bottom here in play at 146.50-ish, I think. So if it bounces off that, it wouldn't be surprising. And then, of course, it depends how will it react here. Should bounce again down. And that is the big question, will we get the break to the upside or we get a break to the downside? So it will take still some time, I do think, before we get that ultimate decision. Now, how it breaks to the upside or to the downside will say a lot and tell a lot about the wave count here, if it's an A, B, C, purple, or a 1, 2, 3. If it is a 1, 2, 3, 4, 5, then we should get the continuation of C. If it's an ABC purple, then we will probably relabel this to a WXY, which finishes basically wave B. So B will go here, and we get a WXY, and ABC will be part of the X, right? If it's a 1, 2, 3, and we get the break, then we should see the brown C continue. This is the weekly chart of the Pound USD on the Admiral Markets Supreme Edition MT4 platform here, and you can see price is really getting close to that bottom, accelerating last couple of weeks here. Two strong weekly candles here, and this week seems to be a lot of bearishness as well, but we are approaching that bottom. So I did take a short earlier this week on the Pound USD, but only once, because now we're approaching that bottom, and I don't want to short it right into a big monthly and weekly bottom like that. So this week, a bit higher here when there was still enough space. So let's take a look at the daily chart here, and you can see price really accelerating here with a lot of daily candles pushing lower and lower. But because of that bottom, I'm definitely cautious, and I would be expecting that price could make a bounce back up to resistance here, and it could bounce back to the 21 EMA, for instance, before perhaps continuing or making a bigger correction. All right, so when a 4-hour chart, basically it's been accelerating upon the break of this bottom. Price has been actually moving down pretty fast, like this, you can see. And yeah, it's basically in a very strong downtrend. It's just that a big daily, weekly, monthly bottom is nearby. Until price either breaks that or responds to it with an upside, I'm going to be cautious and standing on the sidelines for the moment. So that's the big question: can the bottom break, or will we get a bounce? I'm expecting a bounce, and in fact, then I will see how price responds after the bounce. Will it be a bounce like that, and do we get a strong reaction up in here, or will it be even a shallower response, something like this, for instance, that will automatically be a bear flag and expectation for downside? Or do we get a very aggressive upside like this, and then a bull flag like that? Then I would expect at least one more upside. So really have to see how price responds to this level before I can make a judgment on the pound USD long-term count. But you can see the scenarios I'm thinking about depending on how price responds. All right, now looking at the dollar-yen monthly chart, you can see price basically making 5 waves to the upside, and it's a very nice trend. This is a trend that I was expecting together with a trading buddy of mine. Basically, here we already saw the consolidation pattern and the reversal signs, and we were expecting an uptrend and strong impulse to the upside, and that definitely happened. We saw a lot of momentum here as price started to rock to the upside. A 1, 2, 3, 4, 5, right? Especially here, strong momentum as a wave 3 of 3, a triangle as part of wave 4, and then a smaller wave 5 to finish wave 3, hit another wave 4 basically, and then a strong wave 5 with another 5 waves within that. Now, I expected some difficulties here because it did seem like a wave 5 of 5 to me, and of course you never know. That's why I had a resistance line. If price would have broken above the 125.50 resistance, then, well, there would have been probably an extension of the waves, impulsive waves to the upside. But price didn't, and I expected some struggle at that point. Just like I expected to the upside, we expected here to struggle as well. And basically, you're looking at kind of a head and shoulders pattern here, right? You got a wave 3 left shoulder and a wave X right shoulder with the head in the middle. And it does look like that. Does look like a bit of a reversal pattern here. And especially if you look at my candlestick or candle count system here, 1, 2, 3, 4, 5 candles not breaking that top, so it was already pretty doubtful that that top would break. But the 6th one was the confirmer. The 6th was bearish and did not break that top, did not break through 125.50ish, which means that from my point of view, the uptrend was over at this point, or the impulse at least was over, this impulse that we had in wave 5. So I think it's pretty clear now that we're going to get a bigger correction. Price also broke through this dotted purple line, broke through this dotted blue line at the moment. So I think that we're going to get a bigger correction as part of a WXY purple. And logical places where price can fall to are the fibs when we put a fib from top to bottom here. All right. So that's something I think is very likely at the moment, that price is retracing that swing. That means basically when looking at the targets, you can see the 23.6 fib at around 114. There's also 100 fib probably of the WXY, which is not visible here by accident. But you also probably could expect maybe price to go down to the 38.2 fib, but that's a pretty deep retracement, and I'm not counting on that scenario necessarily. I think the 23.6 fib probably is, at this moment, the most likely scenario at 114, a bounce. But you never know. You could get acceleration down to the 38. One of those 2 fibs I would expect to be a bouncing spot here for a wave B, and then we go up for a wave C. So basically, this is just, in my opinion, a stalling moment, a correction of this entire upswing here. Well, I should do that actually in blue. And I'm expecting a wave C to make one more bigger upside up to the 61.8 target, or even higher perhaps, right? So more yen weakness after yen, a bit of yen strength here, or dollar strength eventually also pushing this up. So that's my expectation. Now, if price, of course, it really also depends on how price bounces at these fibs. There should be strong bounces, and eventually price should break through these resistance trend lines that I have here. Otherwise, you know, I'm not expecting that wave C then to materialize. But this is basically my expectation, and then price has to prove that analysis by indeed bouncing at these fibs and then breaking the trend line. Obviously, if price then breaks through the 38.2 fib, then, well, it's looking differently and price could keep falling at these fibs, right? And that could be an alternative scenario that I will consider when price does push through those fibs. Interesting here on the MetaTrader 4 Supreme Edition platform is when you look at this weekly, well, I should maybe even start with the monthly. You see clearly how many candles have not been touching the 21 EMA, and there are a lot of them. They are about 35 at the moment. Now the 36th one has touched the 21 EMA. So the first time in about 3 years, price has touched that level and that 21 EMA, which is a very important thing. But also have to realize that because it's been such a strong uptrend, price basically is probably going to bounce at this 21 EMA band and continue, right? This is such a strong uptrend that basically on a monthly chart, we could get a big correction here. But after it corrects, I do expect on the monthly chart this trend to continue and use the 21 EMA as a support. Price could dip a bit below the 21 EMA. It doesn't have to really stop at it necessarily. So that's possible. But as we know, the 114 is the 23.6 fib, which is here, and equals roughly this, obviously this 21 EMA, right? There's a confluence here. So I do expect price to bounce there. On a weekly chart, it's looking like this. You can see price has stayed above the 21 EMA for a lengthy period of time, starting here and basically respecting the 21 EMA multiple times. In fact, look at that. The first dip was here, and the second dip is here, which means that once price breaks below the 21 EMA for the second time, there's a good chance it could go back to the long-term moving average, and you can see that's a way down lower here. So it seems like we're going to be filling in this space right in here between those moving averages for the first time in a very long time. So if this week's candle closes anything like this, I think that is a confirmation. Price could retrace a bit of that weekly candle, but I would expect that the follow through, in my personal opinion, to the downside, down to the next support level, and price could make kind of a bull flag pattern like this here, and we could connect the bottoms and tops and expect price to kind of do something like this, I would say, down to support before bouncing. And this process could take a few months, could maybe take 3 to 6 months, I expect, before we get the bigger bounce to the upside. All right, traders, that wraps up the recap here of the majors on the long-term focus. Make sure to take a look at Admiral Markets and check out their offering. And if you like Admiral Markets and you like what you see, perhaps you want to open an account through us, and you'll get an extra moving average course plus credit for your volume. Also, take a look at the pivot point strategy that is discounted till the end of the month. Make sure to take a look at elitecurrency.com/accurate pivot points. Thanks again and wish you good trading. Cheers.